Ariel Investments Vice Chairman Charlie Bobrinskoy is back to break down these crucial moments of the trading day. Plus, we've got Jeff DeGraff on the outlook for the energy sector and the charts, and Kate Rooney on the latest wild ride for crypto. We'll start with the NASDAQ outperforming today. But all three major averages are up significantly, more than 2% right now. This follows, of course, the worst week for stocks since the start of the pandemic. The S&P is up a nice 2.6%. Charlie, inflation is very much a problem, as you have predicted for a long time. The Fed is trying to catch up. Are you now satisfied that that's what they're doing and they're going to get it under control?
So I hope you're sitting down, Sarah, because I am going to change
I'm standing
just a little bit here. Oh, that's not good. For the first time in about 2 years, I am going to be just a little bit less bearish about inflation. I think for the last 2 years, we've had nothing but a straight up line in the money supply. We're up 42% in M2. That was going to have no result other than inflation. Now, finally, for the last 2 months or so, we're seeing that flatten out. We're now getting a Fed that not only is increasing rates, but is not behind the scenes flooding the market with more cash. And you can see on this chart that even in the Great Depression, even in the Great Recession, the money supply only went up by 9% or so in 2009. Right after COVID, in February of 2020, the money supply went up by 42%. It's never, ever done that before. And that couldn't have done anything but cause inflation. Now it's finally leveling out. The Fed now finally gets it. Now there is a lag, so this is not going to show up tomorrow. It's typically a lag of about 6 to 15 months, call it half a year to a year and a half. Over that time, I think we're going to moderate inflation. We're still going to have it for the rest of this year, but we can finally see the other side of inflation, and that will be very helpful.
I love an old M2 chart. Doesn't get enough airtime. So clearly the liquidity tide is changing, right? It's starting to peter out and will come down as the Fed tightens policy. Isn't that bearish for the stock market, Charlie? Or is it a good thing? Because inflation, in your view, sounds like it's peaking.
Yeah, I still think we have fundamental strength in the economy. The Fed can squash that if it's not careful, but the underlying balance sheets of consumers, the unemployment rate is very low. There's a lot of pent-up demand for people that would like to buy cars and houses. So there are a lot of good things that are still in place. I think eventually we obviously get an end to the war in Russia and the Ukraine. That'll be good for the economy. So there are enough positives. The one big negative, I'm not the only one to say this, is the Fed raising rates quickly is not helpful. But I think we have a chance, about a 50% chance, to get through this without a bad recession.